Good morning, everybody. Welcome. Welcome. We'll get started in just a minute. Good morning. Good morning. Yeah, running just a little behind this morning. Sorry about that. So we'll get going. Yeah, have a great trading year. Absolutely. All right, we'll go ahead and get started. Welcome, everybody, this morning. This is Michael coming to you from Game Edge on Tuesday, January 6th with our pre-market prep session. As always, here at Game Edge, we'll start with our three pillars, sentiment, structure, and trend. And then at the end, we'll look at some individual equities. If anybody wants to go over any individual stocks, I'd be happy to cover those. Again, just getting up and running here really quickly. So GameEdge.us, you can come join us. Like and subscribe on X and YouTube. You'll be notified. Notified when we go live with any of our content. We had a pre-market prep yesterday, and as always, we try to post throughout the day if our Game Edge team is available. So good morning. All right, let's go ahead and jump right into it. We start with our market trend model. Obviously, this is the trend portion of our three pillars of sentiment, structure, and trend. We're currently seeing the market trend model improve. TC4 plus is on. So what does that mean for everyone else? It means our mechanical portfolios are now turned back on. So quick orientation, the bolded white line is our cumulative tick. That's our intraday instantaneous CT. That's based on the tick index that's buying versus selling in the overall market. Obviously, you want to see that moving to the upside, indicating more stocks are being bought than sold. And then our colored ribbon is our longer look back period. If the red is above cyan, we look for putting our capital to work, as long as the the bolded white line is moving up also in a positive slope and above the colored ribbon. So again, we'll be putting capital to work today via our mechanical portfolios is our trigger to turn those on. We also want to watch for this bolded white CT to stay above the colored ribbon, make sure we don't have a quick rejection, and then start cutting back through the colored ribbon and back below the ribbon, indicating more selling versus buying in the overall market. So we'll watch that as we head into today, and then also look at our market trend model via our trading view script also that was showing improving market trend yesterday for most of the day. All right, let's go ahead and jump in the SPX options complex, largest, most notional value. We separate the SPXA from the SPXP. SPXA is your cruise ship. These are institutional positioning as denoted by our web app here, and the next expiry turned on obviously January 16th. We are call dominated via the structure of the SPXA. Transition area is extremely important. We've been really discussing that 68.80, staying above that, have the opportunity to appreciate price appreciation up towards 7,000. We are call dominated, so we have in the money calls below us that should be supportive all the way through the overall transition level, even down towards 6,800. We get below 6,800, it'd be a little bit more risk off looking, and most likely this would possibly flip towards put dominated. But as of now, structure remains strong heading into the monthly expiry. Pullback should be supportive, and then if we're above the transition area, we should have the opportunity to price appreciate up towards 7,000, possibly not into this expiry, but that would be the upward trajectory towards 69.50 via the SPX option structure, at least from an institutional standpoint. All right, moving on the SPXP. Again, the largest expiries are turned on via our open interest quartile scale. This is all interactive via our web app. You can choose the highest weighted expiries, and obviously this shows those. And then we've also picked out this next week, which obviously is the top quarter percentile for expiries. We are call dominated above and below spot price. So again, pullback should be supportive. You notice the transition area, 6,900, 6,905. This is tight and unambiguous. So staying above that would give the edge to the bulls. You can see the net gamma bars as well as the net charm bars. We do have some overhead area that is going to be a headwind at 69.50, and that's COTMC. So that's a proprietary gamma edge level where out of the money calls become in the money. And then we do see some monetization into that overhead area. We also see COI up towards 7,000. Again, I've discussed that 7,000 level into the monthly expiry. And then 69.75 is where PGEX is at. Again, that's an area overhead with highest speculation that we could see some stalling. So 69.50, 69.75 do look like opportunistic moves to the upside as long as we stay call dominated and our market trend model continues to improve. To the downside, you'll notice that 68.80, again, that was the confluence of the SPXA level. So again, key level to stay above for the bulls. And then towards the bottom here, we see 6,800 where INGEX is at, and I'd already discussed that. If we get below INGEX, we'd be a little more cautionary and risk off. So as long as we're call dominated, pullback should be supportive. As we continue to see above transition area, we look for 69.50 to 69.75 and 7,000 to the upside. All right, let's move on the SPXP delta balance. Again, this is separating the option structure from above spot price and below spot price. That would be what we determine, or what we refer to as the left-hand plane, which is below spot price. That's your red dotted line. And the right-hand plane is above spot price. That's your out of the money speculation, calls to the upside, as well as in the money puts. And that's your green dotted line. And then the aggregate is the blue dotted line, which is what we refer to as our delta balance. So heading into today, delta balance is at 1, or railed, as we say, at 1. So that's giving the edge to the bulls as a call-dominated overall structure, which we've already seen. Our only cautionary look is heading into next week, the end of this week into early next week. We do see the delta balance drop pretty significantly, as well as the left-hand plane drop below 0. So that would give the edge to the bears. Obviously, that's in the money calls below us, at least either monetizing or expiring. And then we also see the right-hand plane dropping also. We do maintain above the 0, which is an edge to the bulls. So that'd be an out of the money call state, but it does weaken and the delta balance starts dropping towards 0. So we could see some weakness into the middle of this week and to the end of the week. Obviously, this is the 8th expiry. And then we head to the 9th. Which is Friday, and then on out in time, which would be next Monday. So we'll watch to see if we do see some weakness midweek here, heading into the beginning of next week. We'll watch that structure. Moving on, the SPXP 0DT net stack command. This is high sensitivity levels heading into today. So you'll notice that the left-hand plane and right-hand plane integrals are fairly balanced. So this could easily flip towards put dominated depending on where we're at. We do have in the money calls at 6,800 below us, and then 69.50 to the upside, which I've already discussed. If we're above 6,900, we'd be looking for 69.50, but again, not a strong out of the money call presence. So again, that upside speculation is starting to, just wane a little bit or be degraded. So we're not seeing a strong speculation to the upside unless we see that change via our our intraday speculation, which would be our vol-m command. We'll watch that to see what market participants are doing. Net charm 68.50. Overhead, you see significant net charm. So that's going to be a headwind towards 69.80. Those out of the money calls will continue to degrade throughout the day and provide a negative overhead headwind via charm. And then supportive on any pullback down towards 68.50. Those out of the money puts, again, those will continue to be supportive. Net gamma, you see those high sensitivity levels. Net vanna, you see the right-hand plane integral is significantly larger than the left-hand plane. So this could provide a tailwind if we see volatility drop, as well as out of the money calls go in the overall complex. And this could be significant vanna move to the upside if we do see those two conditions met. Again, drop in volatility, drop in VIX, as well as out of the money calls go in the complex. So we'll have to watch that intraday speculation via our vol-m command to see if we do see that those calls going into the complex. All right, moving on, the SPXP 0DTE, again, picked over here via our web app, call dominated above and below spot price. The yellow box is our drunken sailor range. So again, if you're within the drunken sailor range, it's a very low exposure area. You're driven by intraday call versus put speculation. Again, you'll notice the transition area, 6,900, 6,905, GEX and DEX transition overlap. So we have a high confidence today. That's going to be an important area. And then again, we reference that 68.80 to the downside. So we will continue to look to see that being supportive. Bottom of transition on SPXA, as well as SPXP full complex and SPXP 0DT bottom of drunken sailor range. So any pullback into the 68.75, 68.80 where we see some stalling, we'd be inclined to go long for supportive action for a move back towards 6,900 and then back over 6,900 towards 69.50. Again, top of DS or drunken sailor range is 69.35. Above that, you'll see that significant charm headwind. net delta here is negative 69.50. And then that charm there is overriding really the overall structure. Above 69.50, we could start moving into that Vanna tailwind if we see volatility drop, as well as out of the money calls go in the complex, so that could shoot us up towards that 69.80 level where you see PGEX and COI. So that's the highest speculation level to the upside. And then to the downside, as I said, 68.75, 68.80. We would anticipate that to be supportive. And then you see net delta, net charm all the way down towards the lower areas where we would most likely continue to see those be supportive on any pullback. All right, let's move on to the trading view chart for this morning. Again, looking at the SPX pre-market price action right around 6,900. Again, N-Trans 68.95, Zero Gex 68.95 on the full complex, and P-Trans at 6,900. So key area, as we talked about, to stay above for the opportunity to move up towards previous day high is 60. Let me look at that. Previous day high is 68.94. So we're above that. Again, 6,900 will be key. And then overhead, we'll be watching for that 7,000 level, 6,950 and 7,000 to the upside. And then referencing our market trend model, you can see that it continued to improve yesterday. All morning, we're above the railroad tracker, what we determine shorter term moving averages. And again, that was indicating more buying versus selling in the overall market. So we were looking for long positions yesterday to the upside. So we'll continue to watch that as we head into the open today, those key reference areas. All right, with that, I'll leave everybody. Again, we've covered some significant information quickly this morning as I was running slightly late. But if anybody wants to cover individual equities, I'll be happy to do that via our web app or answer any questions about the overall structure heading into the overall open today. DDXterra. Thanks, Michael. I wish you did these every day. I appreciate that. I can read the numbers since your face icon is on top of the chart rather than beside. Oh, okay. Yes, I can move that. Sorry about that. Let me move that to the side. Oops, that's too small. There we go. How's that? Hopefully that helps. Okay, I'll move my face to the side there. Sorry about that. I think this way, though, it does make the chart a little bit larger, but I'll look at actually making myself a little bit smaller too. So Tesla and INTC, yes. DDXterra, also GEX ratio, yes, I'll pull that up. DDXterra, we do try to do these every day. There's some sort of pre-market prep. It may be me or Taylor doing these, but we do have, we always have. And then if you're a member, we always have extensive commentary in our Game Edge pre-market game plan. I'm running the GEX ratio. It'll give me just a second, and then I'll pull that up for you. And then, so we'll go ahead and cover Tesla and INTC. Tesla, so we picked these two. Let me pick the top 25%. So let's go with this expiry first. Call dominated above below spot price. So spot price 447.50 there. You'll notice we are call dominated, so we should be supportive. 465 to 470 to the upside. Let me pick the next expiry. Next expiry is call dominated above below spot price. Supportive on any pullback with the overall structure, so everything looks good there. Let me pick the top 25%. Call dominated. You're right at the transition level on all of these expiries to the upside 450, and then we still have COI, PGEX up towards 500. So speculation for Tesla looks fine on any pullback, and we still have speculation within the overall complex up towards 500. So Tesla looks fine. INTC, let's pick this expiry for the next one. Call dominated on Intel. Transition area here, 3,900. So you need to be above that. But we do see PGEX at 40. So speculation to the upside is probably capped at 40. And then let's go to the next expiry. So 40 to the upside looks like where speculation is most likely going to be paused at. And then same thing with the top quartile, 40 looks there. But we do have speculation up towards 44 and 50, but 40 is that PGEX level. So I would look for spot prices to have some stalling around that 40 level. Let's look at NVIDIA. Let's look at this expiry for NVIDIA. Call dominated into Friday. 192.50, we're above transition, so supportive there. 192.50 to the upside looks like where we'll probably see some stalling there on NVIDIA. After this expiry, we see the structure advance up towards 200, so 200 still looks good. And then the quartile expiry, 200 looks good on NVIDIA. So speculation to the upside is alive and well, and I would look up towards 200 if NVIDIA continues to move to the upside. CoreWeave, let's look at this expiry. 88,000 on the total OI, so slightly lower. Obviously, it fits our 100,000 OI filter. 85 to the upside, you're at top of transition. So get above transition, I'd look for speculation up towards 85. Call dominated on next expiry. Transition widens, though, so a little bit more noisier, but you do have peak X move up towards 100. Supportive on any pullback for CoreWeave looks good. Top 25%. 100 peak X looks like that upside highest speculation for further expiries out. So CoreWeave looks good for a move. Obviously, the next stop is 85, and then 90. You need to get above those, but everything looks good on that for CoreWeave. GEX ratio. Here's the SPXP GEX ratio. So we're above the 1 level. Concerning candle yesterday for me on the SPX, though, really high wick into this overhead kind of TA supply area. So we need to get above that. So speculation saw the drop with the SPXP moving to the upside on the GEX ratio. So again, this is telling you the out of the money call speculation is dropping, what I just discussed with net stack command as well as the delta balance. So I'd like to see this with a positive slope start moving back to the upside if we're going to see SPXP move to the upside. You need to see that out of the money call speculation from market participants coming in. They're speculating on higher prices, but right now we're above the 1, so we give the edge to the bulls. It's call dominated, but I would like to see this continue to march higher, indicating out of the money speculations coming into the complex. So Tesla, would you say that charm would block it from going up on January 16th expiry? Let's see that. Let me go back to that chart. So let's pick the next two. I'm just going to pick the next two expiries. Select all, invert, and we'll pick this next two expiries. So Friday into the monthly expiry. So we're call dominated. Everything looks good. 450 is transition area. So that's the key area to get above. But you'll notice the charm there is not significant until we get up towards 460 and then 470. Obviously, it's out of the money calls, obviously, where the charm is going to be the highest. But really, the largest bar is up towards 470. So I don't think, from looking at the structure, 450 really shouldn't be a large hurdle. 455 shouldn't really be a large hurdle. Possibly 460, but then 470 would be that next area I'd be watching on Tesla. That would most likely be your upside speculation stalling. You'll notice the 5.23% is the expected move for the two expiries. So you go over here to the expected move from spot, and you're looking right at that 470 area, where most likely that's your upside expected move, right? So 470 is your 4.88, and then 472.50 is your 5.44. So that's where I'd be looking, 23 points on Tesla to the upside. Hope that helps on a Tesla user. All right. Thanks, everybody, for joining us this morning. Again, like and subscribe. Let's go back to the SPX to see where we're at. We're right at 69.01. So again, 6,900 is going to be a key level. Already talked about that that confluence. Awesome. Great. Confluence between DEX and GEX transition. It's narrow, unambiguous. We have to stay above 6,900 for today. And then any pullback to 68.95, I'd look for support to go long via the bottom of Drunken Sailor range, as well as the confluence of areas on SPXA and SPXP. And below 68.95, possible more weakness down towards 68.50 is where I'd be watching. So thanks, everybody, for joining us. Again, GameEdge.us. Like and subscribe on X and YouTube. Come follow us. You can go to the newsletter, put in your email. You'll be delivered the Beyond the Bell newsletter. It's all free. And then check out our extensive education via our GameEdge Fast Pass, again, flagship options course. Follows all of our thesis, all of our tools. And then obviously you can come join us in our Discord to get up to speed and join our great community of traders. All right. Thanks, everybody, and make it a great day. And as always, manage risk.